You better go out and buy stock now, let me tell you.
The Dow surged more than 1,100 points yesterday, with the U.S. and China agreeing to that dramatically reduced tariffs. Stocks soaring, with the Dow, S&P 500, and NASDAQ posting their best day in over a month.
Millionaires are made in markets like these, especially if we know when to be greedy and when to be fearful. That's the best way to get rich without getting lucky. So in this video, I'll cover everything you need to know about President Trump's tariffs and trade deals, and which stocks could win big as a result. Your time is valuable, so let's get right into it. First things first, I'm not here to hold you hostage, so here's everything I'll talk about up front. What just happened with Trump's tariffs on China and around the world, where the stock market could go from here, how I know exactly when to be greedy and when to be fearful, and of course, which stocks I'm buying as a result. This is a once-in-a-lifetime opportunity, so let's walk through it together, starting with tariffs. The S&P 500 is making one of its fastest recoveries in history, going up 18% over the last month after President Trump paused reciprocal tariffs for every country except China. And just a few days ago, the US and China agreed to reduce tariffs for 90 days while they work towards a longer-lasting trade agreement. Specifically, the US will reduce tariffs on Chinese imports from 145% down to 30%, while China will lower its tariffs on the US from 125% down to 10%. This is a huge deal because the Chinese government also agreed to pause the retaliatory export restrictions that they placed on rare earth metals and magnets, which go into everything from cars and robots to the chips that power them. But China was actually just the start. The U.S. National Economic Council Director, Kevin Hassett, said that there are around 24 more trade deals coming down the pipe.
There are about 24 right now. And the question of what the priority is, I think, is up to the president. And I think that they might be moving towards getting a good deal in Asia. And there are a number of candidates for that. And that way we're kind of getting trade deals all around the world, and I think they like the look of that. But again, the interesting thing is that they're kind of bespoke deals, and so they really are going into the things that are the big concerns for the individual countries, and so each deal is quite a bit different. And so, that's why they're coming one at a time.
These trade deals should be very good for the stock market because they'll provide a lot of clarity around future tariff rates and where prices for materials, parts, and products could end up. Remember, the stock market goes up when things are more predictable, not when they're better, when they're more predictable, since that lets companies make longer-term plans, larger purchases, and bigger contracts. And despite what headlines were saying earlier this year, we know that President Trump is definitely thinking about the stock market when he's making these deals.
On top of all of these trade deals that we're doing, this country will hit a point that you better go out and buy stock now, let me tell you.
Alright, so there's a lot going on with the Trump administration's tariffs and trade deals. Let's put it all together to see where the stock market could be headed next, and then which stocks could win big as a result. 1. President Trump announced the 90-day pause on reciprocal tariffs on April 9th, and it's still set to expire on July 8th. That's around 50 days from today. So mark your calendars because millionaires will be made if this pause becomes permanent, which is something I've been predicting would happen since they were announced. 2. The separate 90-day tariff reduction agreement between US and China was announced on May 12th, so it's set to expire on August 12th. That seems far away now, but any announcement of a trade deal, or at least a definitive end to increasing tariffs, could send the stock market significantly higher, since so many parts, products, and materials come from China specifically. And 3, we should expect around 24 more trade deals with other countries trickling in over the coming weeks. Any number of these deals could push the market higher, but in total, they should provide a lot more clarity around future trade deals, tariffs, prices, and ultimately corporate profits. But it's not all sunshine and rainbows. It's also important to remember that the 10% base tariff rate on most US imports is still in effect. Likewise, the current 30% rate on Chinese goods is 3 times higher than it was back in January, and that's excluding previous tariffs. That means that the costs of materials, parts, and products just went up for every US company we invest in, especially on anything they buy from China. And higher costs means lower profits, at least until things get settled. And most people won't even start feeling these tariffs until June or July, since it takes around 30 days for shipping containers to go from China to California and around 50 days for them to reach New York. That means consumers will see inflation later this summer, and the companies we invest in will report these cost increases for the first time in their Q2 and Q3 earnings. So stocks could get pretty choppy in the short term due to tariffs, but I expect the constant stream of pauses and longer-term trade deals to cause the stock market to make higher highs in the second half of the year. That's the big connection between these trade deals, tariffs, and the stock market. But this is why it's so important to diversify your investments with assets that don't correlate to the stock market. The problem is that most alternative assets either have high minimums like private equity or they're high risk like cryptocurrencies. That's where the Fundrise flagship real estate fund, who's making this video possible, can help you. They give you access to invest in some of the best real estate strategies without breaking the bank. Real estate investments usually need a lot of upfront capital, but the Fundrise flagship fund gives everyday investors access to high-demand single-family rentals, affordable multifamily apartments, cutting-edge industrial warehouses, and commercial facilities, all in one portfolio designed for diversification and long-term earning potential, with an access point starting at $10. They also have an impressive track record, already managing over $7 billion of real estate across hundreds of high-value properties. So if you want access to some of the best real estate across multiple investment strategies, check out the Fundrise flagship real estate fund with my link below today. Alright, so the stock market could get pretty choppy in the short term as companies report lower quarterly profits due to tariffs, but I expect the pauses to turn permanent and longer-term trade deals to cause higher highs for the stock market later this year. But how do we know when to be fearful and when to be greedy? Let me show you that next. Before I left for my honeymoon, I spent a lot of time covering the Fear and Greed Index, which measures the stock market's sentiment on a scale from 0 to 100. It's currently at a 72, which is bordering on extreme greed. And if we look at the one-year timeline, this is actually one of the fastest pivots from extreme fear to greed that I've ever seen, which is useful to know for anyone who wants to be greedy when others are being fearful. The lowest extreme fear ratings were on April 4th through April 8th, and if we look at the S&P 500, that's exactly where the bottom was, and it's gone up by over 15% in just a few weeks since then. The same is true for the NASDAQ, which is up by over 20% since the Fear and Greed Index bottomed in early April. I'm really grateful that millions of people watched my videos covering this market bottom in early April, and I strongly believe that having a reliable and repeatable investing strategy based on data and not emotions is a great way to get rich without getting lucky. And even though it's called the Fear and Greed Index, it's actually an average of 7 data-driven market indicators, like stock price momentum, strength and breadth, the ratio of put to call options, market volatility, as well as relative demand for stocks versus bonds. That's a lot of high-level market information all in one place, which is why I always check this index before touching my portfolio. And as I've been saying, 2 of the metrics that I use to decide when to buy are market momentum and market volatility. Market momentum compares the S&P 500 to its 125-day moving average, making this a backward-looking indicator. Since there are around 250 trading days a year, this is really the S&P 500's 6-month moving average, and the distance between the current price and this average shows us how much momentum the market has and in which direction. The VIX is the S&P 500's volatility index, which measures how much prices are expected to rise and fall based on options contracts over the next 30 days. That makes this a forward-looking indicator. The VIX skyrockets when stocks start to crash due to extreme fear, and it drops when the market is moving up. So I tend to start dollar cost averaging into the market more aggressively when the VIX starts coming back down after a big spike and market momentum starts trending back upward. Alright, so far we've covered why President Trump's latest tariff pauses and trade deals have caused the stock market to rally, which way I think stocks are going over the rest of the year, and the data I use to know when to be greedy and when to be fearful. Now with all that context, here are the stocks that I think will win big as a result. And if you feel I've earned it, consider hitting the like button and subscribing to the channel. That lets me know to make more content like this. Thanks, and with that out of the way, let's get into the stocks, starting with Broadcom, ticker symbol AVGO. I like to start with Broadcom because whether you've heard of them or not, you're probably already holding this stock. Broadcom sits right above Warren Buffett's Berkshire Hathaway as the 6th biggest company in the S&P 500 and the 5th biggest company in the NASDAQ, right above Meta Platforms. That makes Broadcom the 2nd largest AI chip company on Earth, only behind nvidia. Broadcom has two major business units: Semiconductor Solutions, which account for 58% of their total revenue, and Infrastructure Software, which account for the other 42%. I like that mix because semiconductors have been largely exempt from the latest tariffs, and software doesn't get tariffed in the first place. On the semiconductor side, Broadcom makes high-performance switches, network interface cards, and wireless components for things like Wi-Fi, Bluetooth, and GPS in smartphones. They also make custom application-specific integrated circuits, or ASICs, for other tech giants. For example, Broadcom was involved in every generation of Google's tensor processing units, Meta's training and inference accelerators, and now they're working on Apple's Baltra AI data center chips, which are being designed to power Apple Intelligence by 2027. There are two main kinds of AI accelerators, GPUs and ASICs, each with their own strengths and weaknesses. At a high level, ASICs have better performance per dollar at the cost of being much less general purpose. After all, they're application specific. That's why Broadcom really only sells ASICs to companies that can deploy enough of them to justify the costs of designing and manufacturing them in the first place. Otherwise, it would be better to go with an off-the-shelf chip like NVIDIA's GPUs. That makes Broadcom a great stock to buy alongside NVIDIA. That way, I'm holding a huge portion of the entire AI accelerator market in just two stocks. The global AI accelerator market is expected to more than 9x in size over the next 9 years, which would be a compound annual growth rate of 28% through 2034. Broadcom's software revenue comes mostly from their acquisitions of Symantec back in 2019 and VMware in 2023. Symantec is a cybersecurity company focused on firewalls, application controls, and exploit prevention systems to protect laptops, desktops, and data centers from viruses, malware, and hackers. And VMware lets companies set up virtual machines to do things like pool resources from multiple servers to run more compute-intensive workloads, create isolated environments to process sensitive data, or even create a backup machine that takes over when a primary machine goes down. Broadcom's revenue being split between semiconductors and software make it a great stock to get rich without getting lucky, no matter which way these tariffs and trade deals go. Another company with a great mix of data center hardware and software is Amazon. Even though tariffs affect their e-commerce business, that's not actually where Amazon's profits come from. Amazon Web Services is the biggest cloud service provider on Earth, with a market share as big as Microsoft Azure and Google Cloud put together. By some estimates, AWS powers roughly a third of the entire internet, at a time where cloud infrastructure revenues are growing by roughly 23% per year thanks to AI. And AWS is Amazon's most profitable business unit by far, generating more operating income than their online stores and their subscription services combined. Most investors still don't realize that Amazon is also the world's third biggest advertising company, only behind Google and Meta platforms. Except Amazon's advertising business is growing faster than Google's and Meta's put together, with revenues coming in at $14 billion last quarter and growing at a compound annual growth rate of 26% over the last 5 years. Amazon is currently trading at a price-to-earnings ratio of 34, which is the lowest it's been in 2 years. And according to discounted cash flow models like Simply Wall Street's, Amazon is currently 32% undervalued, which means it would have to go up by 47% to hit its fair value today. That's a 47% upside on one of the best run and safest companies on the planet. Like I said at the start of this video, millionaires are made in markets like these, and now you can see why. The next stock on my list is Google, which dropped by 7.5% last week after a Bloomberg article came out saying that Apple was exploring AI-powered search options to potentially replace Google as its default search engine for Safari. But Google stock has already recovered those losses and then some, since they still have around a 90% share of the entire search market. And Gemini 2.5 is actually one of the best performing AI models to date. That means that Google isn't just sitting back and letting large language models disrupt their core business, which is proving to be much more resilient in the AI era than most people predicted. And just like with Amazon, I think estimates for Google's earnings growth are always on the low side, with analysts predicting less than 10% earnings growth, while Google actually reported a 31% increase in earnings per share on their latest earnings call. And that's not even accounting for all the new AI and chip announcements that they're about to make during their huge Google I/O conference next week. Google is currently trading at a price-to-earnings ratio of 18, which is one of the lowest prices it's been in 10 years. The only time that Google stock was cheaper was at the end of 2022. Google stock is currently under $170 per share, but DCF models calculate its fair value as closer to $260. That would make Google 35% undervalued today, which would imply a 54% upside. The next company on my list is TSMC, the Taiwan Semiconductor Manufacturing Company, which is already up by over 30% since I covered it last month. TSMC makes over 90% of all advanced chips on Earth, from the processors inside Apple's iPhones and MacBooks, all the way to NVIDIA's data center GPUs and Broadcom's ASICs. I'm actually heading to Taiwan later this week to cover all the latest AI and semiconductor announcements at Computex 2025. I strongly believe that this kind of boots-on-the-ground research gives me information that I can't get anywhere else, and I'll be sharing everything that I learn with you, from experts at NVIDIA, Qualcomm, Vertiv, and many of the other companies I cover on this channel, all of which have deep partnerships with TSMC. So stay tuned for that when I get back in early June. Today, TSM stock trades at around $195 per share, while fair value is estimated to be closer to $270. That implies a 41% upside from here, even after the stock's recent 30% rally. I know this video is a little long, but I hope it helped you understand why President Trump's latest tariff pauses and trade deals are making the stock market rally, where I think stocks are going over the rest of the year, how I know when to be greedy and when to be fearful based on data and not emotions, and of course some of the best stocks I'm buying as a result. And if you want to see what else I'm buying to get rich without getting lucky, make sure to check out this video next. Either way, thanks for watching to the end, even though I gave you everything up front. And until next time, this is ticker symbol U. My name is Alex, reminding you that the best investment you can make is in you.